All right, let's cover Fiverr International. So this company connecting people who are freelancers with companies who need work benefited hugely from the COVID area, as you can see in the graph. Has the people stuck around? How's the moat looking? Let's talk a little bit about this business and look at some of the numbers, because indeed they tell a story. As we can see, the stock was just chugging along fine, and then all of a sudden this world-rattling event happened and everybody was stuck at home, and people were creative in finding income and trying to find new sources of revenue, and some were able to offer their skills at platforms such as Fiverr. So we saw a absolutely massive jump in revenue, and this caused the stock price to skyrocket, along with very good macro at the time. The stock market was just having an amazing time on the quantitative easing and the stimmy checks and all that free money pushing asset prices higher. Let me show you what I mean here. So we can see, for example, here in 2020 for the full year, almost 200,000 in revenue. So this is in American dollars and in thousands. So we see here, this is indeed 189 million in revenue. And then we also see that it's almost 300 million just a short while later. And then we see that growth has sort of stagnated here, going from 2022 with 337 million to 2023 with 361 million. And if you account for inflation, this is very, very bad growth. And indeed, as we can see here from stock price, it was starting to get punished when these low growth numbers came out. Even though in terms of a earnings per share basis, we can see that the company started to become profitable here in 2023 on a per share basis, 10 cents. And this gives them just slight profitability. It gives them a very expensive valuation in terms of price to earnings. Here you can see 250. However, it's more interesting to look at sales to the total market cap in this case. So we're seeing revenue here of, for example, 361 for 2023. If we just take those numbers and compare them to the total market cap, we can see that market cap is 900 millions roughly. So in terms of price to sales, it's more fairly valued in that case. However, the showstopper for me in the case of Fiverr stock is in terms of competition, in terms of moat. I might be ignorant on this stock, but I'm not sure how this company is able to sustain the revenues from just connecting this person doing the work to the company. If they are able to create a relationship and they're continuing to do work for this company, what prevents that person from just circumventing the platform and getting paid not using Fiverr, and Fiverr not getting its cut? I've seen this happen on Upwork when a person I met got some work on there and decided to just take it off the platform instead. And we see that there are plenty of other platforms indeed. There are also local competition. For example, Academic Work in Sweden used to connect people for short-term gigs, and they had an app for even shorter-term gigs, just like Fiverr. So it's a saturated market. I see lots of competition, and it's difficult to see where the growth is going to come from when it has really slowed down like this. Obviously, we had this massive event with COVID that really pushed share prices higher. But where's the growth going to come from now? With all of this competition, we're seeing growth slowing down, or we're seeing profitability once again. But if we just judge on the profitability, well, then the valuation is expensive. If we judge on sales, then it's fair enough. But will they be able to increase margins quickly enough and in a sustainable way where they're not going to just lose all the users? Or will they be able to somehow find more growth? Those are the questions we need to ask ourselves in terms of where we can see more value for shareholders and thus an increase in share price for Fiverr, I don't see a way. Maybe if you're more into this type of work, you use different platforms, you can realize that, all right, they have a competitive advantage in terms of this. And then indeed the investment makes more sense for you because you have this extra knowledge that the market is not pricing in. But I'm not using any of those services and I don't have enough knowledge into them to really understand if Fiverr has a moat or not. All I know is that I see people on Upwork circumvent the platform and cut the platform out of its cut, and then I just assume that people do the same on Fiverr as well. And that's why I stay away from this stock. But as always, hope you guys make a ton of money, whatever investments you decide to make. All right, take care now. Bye bye.